Happy Super Bowl Sunday. I am Lisa J. Stocks. Thanks for tuning in. I have a message on the screen. 60 likes today in honor of Super Bowl 60, and I will be getting 5 memberships. So as you come in, make sure to hit that like. If you're not already subscribed to me on Instagram, that should be pinned in the comments. So go ahead and do that. Let me take a look. Is it pinned in the comments? If it's not, I might have to go back and redo that. But let's get into today's topic after you hit that like button. If anybody in the chat is sticking around for a while, keep me updated on how those likes are coming along. So let's talk about it. Building a portfolio from scratch, being confident in your finances, not just having an account, but truly knowing that it is thriving, that you are doing the best that you can. These are things that I like to continue to touch on when it comes to my channel, and things that I have strived to make improvement on when it comes to my personal finances. And, whether I'm going to share the good and the bad with you guys. When things were a mess, what I did to improve it, how it's looking today. I'm just not here to show you the result because everything didn't start off perfect. And that's how it is for most. As you learn and grow, you do better over time. And that's definitely what's happened with me. So let me take a quick sip of my tea, put this down for a little bit. All right, so let's get started. Hello, Daryl. Hello, Jay, Ricky, Crystal, everyone who's chatting already. Thank you for tuning in, chatting, and taking some time out of your day. I know I didn't see the results of how the Knicks game ended, Super Bowl coming up later. But thanks for being here. So first, let's walk through some things that you can do. If you're working, I don't want you to just, like I said, some people they say, "Oh, I have that." I have a 401k. I have an account at my job, but what are you invested into? What is the performance? What are the details behind it? You can't just say, "I do that." You have to know what is truly going on and know the detail, and not let year after year pass and not be looking and having a full understanding. That's where your portfolio could be losing out on tens of thousands, being eaten away by fees, be underperforming. And the last thing we need to do is to be going to work decade after decade, and then at the end of the road, not have a substantial amount for us to live off of. We deserve it. Everyone deserves it. Not just, that's why we have to increase our knowledge so that the people that are already on track, because they've had all of this, passed down to them from their family, all of the knowledge, all of this background on how to invest and save and buy properties and do all of these things. We have to, even if it wasn't, a part of our household, a part of what we grew up learning, the time is now to figure out a way to have an understanding so that moving forward, we can do better for ourselves and the next generations. Hopefully they will want to be on this journey and listen and learn and realize that this is for all of us. And don't think that, where you live, your ethnicity, anything is a reason to hold you back. Yes, we all have a different budget. But, if I'm sharing something, if I'm looking at another content creator, they could be sharing a portfolio much more substantial than mine. Probably have many of my own viewers have a much more substantial real estate portfolio, investment portfolio. But the thing is, I can still look to them and say, okay, look at the percentages, look at the things that they're invested into. Just draw what you can from what they're willing to share. And I hope that you look at things that way, not like, I can't get to where Lisa is. Everybody has a different starting point. Everybody has a different budget. But I share what I share so that you can hopefully have an idea of a path and some, I don't want you to follow me or anyone blindly, but just a way of going about investing, saving, making some things, putting things in place that could give your children a head start. And from there, it's a way to just move forward and make progress when it comes to your portfolio. And know what I'm talking about. Is your portfolio performing well? Is it underperforming? Setting standards for yourself, setting goals for yourself as far as both, like, I think saving, investing, getting out of debt, whatever it is. So I see you've watched your share of Walmart. That's great. Walmart has been hitting all-time highs over and over. They have really had a huge comeback lately. All right. Let me see. And thank you, Daryl. I hope you don't mind. I made you a mod so that you can help out when you see things that you can help out with. So let's get back to what we're going to be talking about today. I've already been touching on it. Your employer plan. So when it comes to that, every company is different. When you start off working, or if you've been working at the place for a long time, it doesn't mean that you can't take a second and go back and review whatever you did day one, whatever you did starting off at that company. It may not be the same direction that you want to go in now. That's definitely was my situation. So every company is different when it comes to their, employer retirement plan. Some might have 20 different fund options. Some might only give you 5. Some might be strictly into that target date funds. And so you have to know what is the best fit. Take the time, call their brokerage company. Everything, I can't say that you have to see the worth in it. Everything is not just going to be that easy that you don't need to take time. You don't need to make a phone call. You don't need to put all the funds into something like I use sometimes is stock analysis. I'll put a whole bunch of funds in there so that I can see what the performance is, what the expense ratios are, what the dividend yield is, all lined up, so that you can then from there have some insights to say, okay, narrow it down to which funds do I want to take an even closer look at? Which are the true contenders for what I want to consider for my investments, and which are, definitely not at all an option for me, and I need to get out of it. That definitely has been, something I've gone through. So I want to touch on something that I've shared in the past, but I think the last time I was looking on one of my community pages, and I had posted this back in, it was a while back. I want to say like September. And one way that I've incorporated being able to stay in those target date funds, but get improvement for what I wanted to have a higher exposure to, is by using this strategy of not using the fund that corresponds to your actual retirement age. So this is just an example I had created. For example, instead of using the 2040, which might correspond to the closest year of when you might be turning 65 or 67, using a 2060 fund. So you're still in the fund, you're still within the offerings. If you don't want to have to even choose or do the research on the funds, this alone can give you an idea of the 2040 fund. It'll give you a breakdown of what percentage of that fund is in stocks and bonds and cash, international, all those different things. when I was looking for funds or trying to stick with using them, or if I was limited that I had to use them, I was looking for funds that were over 90% stocks. Now, guys, this is not financial advice. This is me sharing my personal journey and, different strategies that I've incorporated. So it says right on here, it's a little bit obstructed there at the bottom, but pick a date later that has you in stocks longer. So that alone can make a huge improvement to the long-term performance of your investment account. And let me see, I want to share okay, so I can click on it here because I think that's a different screen I'm sharing. Yes. Let me see, let me go back. So I'm not going to share this person's name, but when I posted this is what they shared with me. And it's that what I'm talking about right now is a terrific recommendation. They said they're 60 years old. They were using a target date fund for their day job. And when they looked, their performance of the previous year, this is a comment from September of 2025. They said that their performance over the last year was 2.3% during a bull market. It would have been better off in a high yield savings account. He said, the big mistake I made was not keeping an eye on it closer. I think Lisa's recommendation to put your target date fund out further is excellent advice. So that was a real, a lot of people reacted to that and they said, yeah, this is something that I need to take a look at. So something that I've talked about in the past, but really want to continue to highlight these things. I know there's always new people here and just want to stress that even though interest rates are coming down, that is really sad that probably one of the most substantial investments that this person has already at 60 years old should have been thriving, should have been getting at least in this, current economy, 20% at least a rate of return. And he got 2.3% because he's in a fund that is so conservative, even though he's 60, doesn't sound like anything that he would have intentionally been in even at that age. So we have to make sure that we're not just, that we're having our eyes open to it and not thinking that that the brokerage account, that our HR department, that whoever knows better and is interested in doing better and advocating for us. We have to get out there and advocate for ourselves when it comes to everything, your finances, your health, your child at school, all aspects of life. You have to be the one to get out there and represent your family, show your face, let people know I am interested. I am not just, don't just default me into whatever. I am hands-on, I am interested, and I want the best, and so you have to go in there and you can't just be a person with, you have to go with some knowledge, a little bit, find a way, have a standard, have something to ask for so that you can make sure that they are making sure to show you those offerings, to make sure that they know that you're trying to raise the bar when it comes to what you're trying to achieve. You have to get out there and basically fight for yourself and not be intimidated, to ask questions and at all costs. Make the time, put a little time and effort into these things. I know sometimes, time just gets away from you. There's something that you may think you want to do, and before you know it, weeks have passed, a month has passed. But don't keep on doing that. Set goals for yourself, set timelines for yourself so that we can be on track to build wealth for ourselves and our family, because we deserve it. We deserve it. I know I do. And I'm sure if I could hear y'all talking to me right now, you would be saying, yes, we sure do. Don't count on others to take care of you. Exactly. Thank you guys for tuning in. Thank you everyone for chatting. Make sure to give the live a thumbs up. Subscribe to me on Instagram. let me see. I'm not sure if my Instagram is pinned in the comments or not. It doesn't look like it is. I have to go back and do that, but I won't take time. All right, so we went over it. I gave an example. Let me share. I just gave an update a couple months ago. Well, not recently. I shared that one of my portfolios had gotten to 100,000, and one of the changes that I made to that portfolio in Q3 of 2025 is what I just shared. I changed a portion of it to a target date fund that was substantially further out. It might have been maybe the second to the last target date fund that's currently available. So like I'm saying, for example, if jump to present, let me see, trying to scroll around on one of my community pages here. So I decided to move into a 2065 fund. And I'm thinking at the time when I was looking at funds, the furthest that they went out was to 2070. So I didn't go with that one. I think I went with just one down from there. And I also, so between the 2065 fund and a large cap index fund, I put that portfolio, 95% of that portfolio is in that. And since I made the change, well, over the last year, well, 13 months, I'm up 22.5% on that portfolio. And it's something, like I said, it's still a predominant amount in a target date fund, but one that I think is definitely more in line with my needs, but allowed me to leave this kind of there, set it and forget it, not picking individual stocks, sticking to what I was limited to by the fund offerings of this particular company, but making sure to maximize it as much as possible. So at the end of 2024, at the late 2024, December, that account balance was 84,000. And right now it is 103,000. So a lot of that growth came after I made those adjustments, and I'm going to keep an eye on it. I wasn't disappointed with the performance that it had in the fund that I was in previously. I had been sticking with that fund. I was up a total. It had been in place for several years. I was up 120%. And so it was one of the last accounts that I really said, well, let me evaluate and see if I want to make any changes to, because I wasn't disappointed. The performance seemed to be okay, but okay is not going to be good enough for me. I'm going to strive for the best that I can be possibly creating for myself, because I want to maximize my money, not in any way that is, I know a lot of us feel like we're behind with our investing. We're getting older. I don't want to see you doing anything extreme to catch up, because that might just put you in a place where you lose money, where obviously your goal is to make more. But I'm doing what I can to make improvements in order to make up for some of that lost time, but in a responsible, reasonable way, in line with my risk tolerance and goals. So hello, Wingo and Corner Clubhouse and everyone that is tuning in. TC Talks, nice to see you guys. Let me take a look. I'm going to take a quick second to, most of your stuff is in CoreWeave, NVIDIA, and a few others. Okay. No funds in your portfolio? S&P 500 or something like that? When it comes to my retirement, I do a lot more of those funds, FXAIX, things like that. I don't pick a lot of individual stocks when it comes to my retirement portfolio. I would say I probably only have 3 individual stocks. One is a stock of a company that I used to work at, and one is NVIDIA and Taiwan Semiconductor. But I stick to a lot of funds there because I don't want to have to constantly rebalance and make changes there. Now, when it comes to my taxable accounts, I have, all of the Mag 7 and some other investments like, Netflix and things like that. I have several ETFs and a few high-end dividends these days. It's always growth stuff for me. Oh, yes, I'm striving for those growth individual stocks as well as funds right now myself. Okay, so guys, let me see. I see 14 likes on this live stream. Should I combine? I guess I should. I think I will at least do that. But I want to get to 60. So guys, I chose 60 because it's Super Bowl 60 today. So we get to 60 likes. I'm going to take a quick break and gift 5 memberships. SPMO, VXUX, VOO, VUG, 60%, and the rest individual stocks. Okay, I like it. I do not have that international fund, VXUX, but I have something similar to all the rest. I have SPMO, I have VOO as well as FXAIX for S&P 500 exposure, and then I don't have VUG. I have FSPGX, which is the Fidelity Growth Fund, which I feel is similar to VUG or SPYG, those type of growth funds. I'm at 23 likes. Thank you. Thank you for the update. Okay. Yes, I know. I know you don't want to know anything about dividends or anything else, Daryl. Daryl likes strong growth in his portfolio. I don't think everybody should have my strategy. It's risky. Yes, that's something else we can touch on. When it comes to investing, it's definitely not a one-size-fit-all thing. We are all I started off the show talking about. Obviously, we all work at different companies. We all have different offerings. We're all at different brokerage companies, whether it's Fidelity or Schwab or Empowerment, all these different companies. So you're going to be limited there. But I want you to take the time to find the best of what is available to you, and then from there, you also have to be ready for to take into account your age, because what is your time horizon for preparing and for retirement and different things, different goals that you may have, whether it's related to your retirement portfolio or your taxable account. You have to be in tune with what's going on, what the time frame is for you to need to tap into these investments. And so I think I might have shown this last week also, but this is the performance of the S&P over the last 40 years. So, it's not going to be perfect. There are going to be years where there is, no growth, but then substantial growth the following year. There's even a 3-year stretch here of, a downturn 3 years in a row. We have substantial years of negative performance like 2008, which many of us can remember. After thinking about what we were going through at the beginning of the pandemic and lockdown and everything, we made it 2 years with very strong results. And then after that stimulus money and everything, it was time for that economy to dial back. And then we had a negative performance in 2022. So now we're back to, substantial gains above, much higher than the average of 10 or 11%. But you have to know where you're at and be ready to adjust your portfolio so that you're not in need of really dialing into it when there is a need for your particular portfolio to recover. And I want you to always be mindful of that. Mindful, but not fearful of the potential of long-term investing and building wealth in this way, because it is a huge opportunity that I don't want any of us to let pass them by. Now, even if in the past you've been, you lost money, you got into a bad investment or crypto or something like that, I hope that doesn't turn you off to investing also. Start again. And now that you've been through that, when you know better, do better. And I hope that no one's ever too turned off to investing because of their past experiences. So let me take a look. Seems like Daryl and Belt Loop are having some going back and forth about something in the chat. So let me go back and see what's going on with those comments. But I'm going to take a quick second to get my my Instagram link. Share profile. Yeah, I don't know how to pin it on this one. Let me go to the other chat. Okay. We are discussing success strategies just before retirement. Okay. All right. Salute right back at you. And let me go back a little bit. So guys, what are your thoughts about what we've been talking about today? Before I get into having a lot of investments in your portfolio. Sorry, guys. Just give me one more second. Yeah, not working out for me here. Okay, let's see. Maybe it is there. Okay, yep, it is there. All right, let's get back to, okay, my daughter is texting for a ride. You're going to have to wait. Okay, so now let me take a look at the chat for a couple of minutes. Thank you, Miss V. How are you? I was just thinking about you. All right, I don't have saved when 2004 rolled around, but it's racking up now. Shovel money into accounts. I'm not sure what type of accounts we're talking about here. Okay. Much easier if you start as young as Lisa. Yes, I did start. My investing journey started when I was a teenager, not because of my family situation, is because I was working full time already. So that's what got me started at that age. But my daughter, she got started maybe about 10 or 11 years old. We opened her UTMA account, and then when she was 13, she was able to get her Fidelity Youth account. So that's for age 13 to 17. Okay, so I'm going back a little bit in the chat. But guys, let me know if there's any questions or comments that I missed that you want me to see. I don't think everybody should have. Okay, so yes, I was talking about that. Everyone's circumstances are different, and it's definitely not a one size fit all thing. But I hope that you can draw some inspiration and insights, and just my thought process on certain things not necessarily invest into the same funds that I have in my portfolio. And you're making a comment about, yeah, I've jokingly said, if I could have, if I had like the crystal ball and I could have seen into the future, um, which we don't. And so you build your portfolio in a reasonable way based on your knowledge and risk tolerance, like I'm always saying. But if I would have known, I could have just simply put all of my money into Bitcoin and Nvidia and been so much more richer right now. But that at the same time, because we did not know what the future held, would not have been the most responsible thing. You have to do things like that if you were going to gamble and be aggressive in that way. At least have a stop loss on so that you can make sure to capture those gains. But most likely, depending on where you set your stop loss, you could have made it through having a substantial amount of money in either one of those investments, Bitcoin or something like an Nvidia. If we only knew, some of us are in different countries and have to apply tax strategies. Yes, I am in the USA. I'm anywhere from 3 to 6 years from retirement. I'm working a lot of hours overtime to increase my pension and putting extra money into my retirement accounts. Okay, Belt Loop is sharing what's going on with them. Let's see. All right, let's hit that like button. Okay, I think somebody wants me to gift those memberships today. Okay, it's still on the screen. Okay. What did Fast Eddie share? I missed some things here, but I'm just going to jump to, oh, I see something is starred. Oh, thank you for the super chat. You are back to working full time. I hope your 401k or whatever type of account is available to you at your employer is set up and being funded. You know what you're invested into. Okay. All right. So now I want to talk about, I went over the target date extension, position sizing and staying focused. Now, earlier someone shared that they're at 60% and they ran down all of the funds that they were in, and it was a really, I think, a good mix. Momentum, an S&P, a growth funds. I thought it was a really good mix. And then 40% into individual stocks. So they have a plan, they have a strategy. I have been definitely, I had to take time to create that for myself. I just recently put a halt on, well, just at the end of February, I stopped doing my daily investing into VTI after, I think, 3 years and 4 months or so. And why I made myself do that for that stretch of time is because I felt that I didn't have that structure of a balance of how much funds, how much individual stocks, REITs, and different type of investments. My portfolio was not the way that I wanted. At one point, when it comes to my taxable accounts, I was over 50% into Apple stock. So I had to take that time to dial it back and do that. I didn't start off like now. If I'm like my daughter's portfolio, it's 80% funds, 20% individual stocks, it's been like that since the start because I already had the plan in place on how we're going to do this from day one. Whereas when it came to my portfolio, her portfolio is always going to do better than mine because I want to make sure that it's my daughter. I don't want to make any mistakes. I already made the mistakes in my own. So it's going to make hers obviously better. But if I could go back and have that structure from day one, I wouldn't have been going into those individual stocks so heavily, And then when it comes to my retirement portfolio, I probably would not have gone so heavily into those basic, broad index funds and maybe incorporated more growth focused investments there sooner. So now that I know I have a structure and I've had to take the time to put work into certain areas to get them, get the weighting how I want it and how I think is a better suited for the growth and the risk that I want when it comes to my investments. Hers should be more aggressive. She has more time on her hands. Okay. Um, I'm happy with the growth, and she does have some investments that, like, when I say individual stocks, like her Tesla stock, she has a better, um, she has a better average cost than mine. So, I mean, I've been okay with it. I will be probably going forward. She's going to be going to college soon, so probably not going to be really in the building phase for a bit, but I will definitely encourage her to know that time is on her side when it comes to choosing her investments. Okay. Teresa, what is going on? Is there some confusion about my live stream? Thank you for trying to explain there. Oh, maybe they're not seeing other people's comments. Is that what's going on? Yes, I can see everyone's comments, but you guys can't see the comments of the people on if they're in the vertical. QQQ, are you? Quick question. Is that what you're trying to say? Are you streaming to more than one channel? Nope. Two, but only on my channel. I'm not on any other platform, just YouTube. Okay. No, Belt Loop. I want you to chat. I want you to contribute. I will do my best to keep up with the chat, but that's what I want. I want engagement. I want you guys to share your thoughts. Okay, taking a look. NVIDIA 30 years ago, it was a leader, but I had no money. Okay, I don't know. I don't know what I was saying at that time. What do you mean you have to, what does that mean you have to be odd to be number one? Oh, did that pop up in my automatic messages from Nightbot, or did somebody say that in the chat? That's just a saying. If that popped up in the chat, that's just a saying that I like from Dr. Seuss. And I joke about myself saying that that I'm a weirdo, and I have such a passion about personal finance, and this is really something. I'm glad that I went with this as a topic that I wanted to focus on for my YouTube channel, because I really want to see us doing better, and I see so many mistakes that I've made, and I hope that I can, by sharing my story, that I inspire or encourage or just let everyone know that you can do it if things are not going well. Strive to make improvements and just move forward. And Yeah, I know you like that quote too, Daryl. I think one day I said it and you were like, I'm gonna make that's gonna be my quote of the day. Um, okay. And let me take a quick look. I see 27 likes on this live. I'm not sure how much I have on the other side, but guys, make sure you hit the like if you haven't already. If you're not already subscribed and you enjoy this content, make sure to subscribe and hit that notification bell. I put out videos throughout the week, shorts, and I try to go live every Sunday at 3 p.m. Eastern Standard Time. Okay, okay. Yes. Nightbot needs a little, sometimes I have to go in there and make some adjustments. Yes, I will try to remember. And I think I updated my goal in there. We are on the road to 8,000 as far as subscribers on YouTube. Okay, so now I was going to talk a little bit about how long we've been recording this. Okay. I was going to talk a little bit about, yeah, I was touching on it already. When it comes to building my portfolio, I don't like to have a ton of investments. I like to have a substantial, I like to build up my position sizes, you know. Obviously, when it comes to retirement, a lot of us, that's all we do. You know, we contribute from our paycheck, or that's where we started. We contribute from our paycheck. Every paycheck, automatically, it gets invested. It gets invested. You're building in that way. But when it comes to my taxable accounts, my daughter's accounts, I then had to create that structure and that balance that I was saying that I was not doing in the beginning, allowing myself to get too heavily weighted in certain areas. But now that I have an idea of what positions are built out enough, what positions I want to give attention to, I then have to narrow down when it comes to my individual stocks because, you know, there's certain areas that I may want to have exposure to, like semiconductors. Uh, and because I must admit, when it comes to my portfolio, that's where I had definitely have leaned into tech, as well as, you know, I do have some regrets, but you know, tech, I do have some Disney, some Target, Netflix, but a lot of tech like Google, Apple, and things like that. So, but when it comes to my portfolio, I don't want one share of Nvidia and then I'm over here trying to move on to Taiwan Semi and then Broadcom and then Intel and then Google and then Micron. It gets to be too much for me. I like to just focus on a few investments. And then, like for right now, I started incorporating some SMH into my portfolio to keep me from wanting to continue building on those individual stocks, even though the growth potential could be substantial when it comes to those individual stocks. But I have to know which one is truly going to be the winner long term. But I also have to have the budget to put the money behind it. And so I like to just build up my share sizes. And when I say that, like I said, I don't want you to hang on to what I'm talking about as far as you have to set goals based on your own personal finances. So your portfolio and mine, your income and mine, nothing is the same. So, but I want you to do what works for you, and not sit on the sidelines doing nothing is the biggest point that I want to stress. And so, like with Google, that's one that I'm currently, I think, about 25 or 26 shares because, but if I was doing all those other companies that I mentioned, I wouldn't have been able to get to that share size. And when it comes to my portfolio, depending on the price of the investment, as I'm building and as I'm watching my portfolio and looking at that allocation, I then decide what am I gonna continue building on, and I set share size and or dollar size goals as I go along. We can all hop over to the vertical and hit the like button over here also. Listen, Teresa, are you trying to inflate the likes to make sure that I hit the 60? What's going on there? Okay. So, generational investor is sharing Amazon, AMD, Nvidia are all things that you're buying the dip on. Amazon is definitely one that I added to my portfolio last week. I made a quick video about it also. Yeah, their AI spending and wanting to invest in them into themselves right now has the stock market a little wary of what their performance is going to look like. But you, as a long-term investor, not a trader when it comes to certain, not a trader when it comes to those blue chip stocks that I've incorporated in my portfolio. I'm okay with that. If they want to invest into themselves now and then 10 years down the line, me being a shareholder really pays off for myself, I'm ready for that. But that's what it all depends on, if you are a trader or you are an investor. And that's not to say that I do option trade and do trade shares from time to time, but what I do is I have no like, I will buy a put option on Apple or Amazon, even though those are long-term holds in my portfolio. It depends on what is going on currently. I am willing to do that, but I'm always going to be holding on to my shares that are an investment. But I'll buy an option contract going either direction when it comes to my investments. It's not like I couldn't do that because I have a certain belief. If they're having struggles and the stock price is going to go down, yeah, I can ride that wave down and make money there too. Vincent, thank you for the super chat. Happy Super Bowl Sunday. So guys, I chose 60 for the likes for today because it is Super Bowl 60. So let me take a quick second to, again, thank Miss V and Vincent for sponsoring today's show. And thank you everyone for tuning in.
Thank you so much. We do greatly appreciate it.
All right, now back to the chat. I can add a few more if necessary. Well, listen, guys, I don't want you guys to, do you guys have your gifted memberships turned on just in case you actually want to be the one to win the membership today, because YouTube chooses them. I cannot choose them. So make sure you have to have that feature turned on, else you will not get the membership. Okay. All right. So guys, make sure you're also, if you're on Instagram, follow me over there too. I'm trying to get to 1,000 followers on Instagram. You're out as well? Okay, Belt Loop, thanks for sharing. I'm a weirdo. I don't call myself a nerd. I call myself a weirdo. I must not like that word of nerd. Okay. Yeah, so that's how I go about building. Are we there yet? I don't know if we're there yet. I will take a second and check. But yeah, that's how I go about building my portfolio. What are your guys' thoughts on what I'm saying about building up your share size instead of having small positions in so many different things? And another point to that is when it comes to those individual stocks, whether it's funds or individual stocks, I think that some people's portfolio can get carried away. Once you have 20, 25, 30 different positions, especially when it is individual stocks, you then have to keep up with them. There aren't that many true blue chip stocks that I feel that I have to have exposure to in my portfolio. So that's how I go about it, because I want, if I have a conviction into a particular company and I want to have it in my portfolio, I'm not going to want to have one share. I'm going to want to build up a position and hopefully, be in tune with the fundamentals of the company and be there as it continues to grow. Okay. Okay. According to Belt Loop, there is a combined over 60 likes. So we will be gifting memberships. And so, guys, if you need to take a second and go and check on that feature, if you have that turned on and would like to have it turned on, turn it on. So you would go, I really can't explain. You might have to pull up a short if you don't know how to do it, but it is a feature that you have to have turned on in your settings. Definitely loading up on SPMO and growth stocks. Okay. Yes. So my SPMO, it's been going sideways, but I definitely have, that's one that, that I do this with many things. I use my inside of my Webull account. That's where I set my alerts. Whether it doesn't matter which portfolio or which broker I'm actually building the position on. I use Webull as my alert system. So I have all my alerts in Webull. I go in and I'll set it for to let me know, is the stock going up by, I can fill in a few different fields. Say, is it going down by 1%, 2%, depending on the stock. I kind of sometimes have to go in and adjust it because it could get overwhelming. Like Tesla is one that usually has, more volatile price movements than, say, for example, an Apple or something like that. So I can have certain set in there so that I know if a certain investment that I'm holding is significantly down on the day. You can set buy orders, limit orders, if if your budget allows for it, so that you can pick up full shares if it does hit a particular price. There are ways for you to take advantage of the dip or just automate buying fractional shares on a regular basis. Now, Fidelity is where I do my retirement accounts and my daughter's accounts and things like that. They do not have daily investments. A lot of times when I do challenges, that's how I do them, is daily. But you could set up a weekly way of funding your account, and then, or if you want to fund it monthly, however, but you can then decide what day of the week or, in what increments you want to invest automatically. And then for me, I also incorporate on the dip, dollar cost average. I have those set amounts that I am going to invest, but if I have extra money available, I buy heavier when there is opportunity based on the alerts that I have, based on limit orders that I have that just might fill automatically in order to make sure that I'm building up my portfolio and taking advantage of the opportunities that pop up from time to time, like we had on Thursday when the market was really pulling back. And then, you have to know what it is that you want to have a higher exposure to when it comes to your portfolio, whether it's funds or individual stocks like Amazon, which has been giving us an opportunity, in my opinion, if you plan on holding for the long term. And, I share mostly those more detailed posts with my on the Discord, as well as for my community members. But, even on those red days, sometimes I like to share some of my positions so that they can see that because I've been holding for a few years, even if something does come down by 5%, I'm pretty deep in profit. So, you have to know where you started from. Everyone has a different starting point, and it's very rare that something in my portfolio is totally my whole position is down because I'm deep enough in profit on my positions. But it took time to get there. And during my beginning phases of building out my positions, I saw that more often when there was fluctuations in the market. But you have to be ready for that because that's what it takes to be an investor and build your portfolio. And some of the things I'm talking about may not impact you as much if you're just strictly, dealing with 401k. But with that, I want you to keep it in place. I don't want you to look at it for anything other than taking care of your older self and being there to be support for you when you are older. But also, but I do want you to look at it. I want you to look at it to see what is the performance, what are the available options that your particular company has to make sure that if there is a change that can be made, that you're striving for that improvement, that you're striving to, if you get a bonus or if you, um, on your birthday or set certain time frames where you just go ahead and say, I'm going to increase it by 1%. Make those times to not just make increases to your lifestyle, the car and all those different things, but make improvements and increases when it comes to your saving and investment. You're asking Daryl, who is Fire with Dr. Ninja, is a professor. Okay, so my goal at the moment is to get where you are about hitting that first 100,000. Yes, yes. So yeah, that particular account, yeah, I think I did a video on it when I felt like I was watching it, so it was just right there. It was like so close to 100,000 that I decided to do a video about it as soon as it hit. And that's the one that I was referencing earlier today. And that is from a company that I worked at for about 4 years and I got laid off from that particular account. But I left it in place and now, but what I've been doing is I have all of my retirement accounts at Fidelity. I haven't combined them from the different jobs that I've been at, but what I did was I leave them separate. And so I know that this is job number 1, number 2, number 3, and I just been able to make adjustments, leaving them within the particular fund that it was in already, or by rolling it into an IRA so I could have more flexibility on my investment choices. And so there's another portfolio that I've been sharing quite frequently, and that's the one that I have a substantial amount of FXAIX in. That amount was created from money that I transferred over from Empowerment and then reinvested completely over at Fidelity in order to build it up to where it is today. And maybe one day in the future, not sure, I need to put that one in the investment calculator to project on when I think I might hit 200,000 on that one. But I'll make sure to continue to keep you guys updated. So you just started retirement accounts in 2024? So guys, do you have any obstacles on, what type of account to set up? Does your employer have an account available to you, or have you been like only having a taxable account and not gone to either, wherever it is, not set a Roth IRA or something like that on your own in order to be on track with investing in a tax advantaged way for the future? Okay, I'm going to take a quick look at the comments. Lisa, if you roll all your 401ks together with your current one, you'll be able to do the rule of 55 if you need to. Okay. Be sure the account my employer has for me is a pension. Okay. This is pretty common for police officers. Okay. So I am not familiar with, with some of those government and state jobs have different options like that. Okay, I'm just taking a look at the chat. I cashed mine out when I left my other jobs. Spent it, no reserve. Okay. Yes, guys, I want us to always try to keep our investments invested and allow them to do the job that they were intended to do. So retirement is for retirement, not for anything else that comes up. Buying a house, fixing the furnace, all those different things. All right, so let me gift those memberships because someone did highlight to me that the number has been hit. And thank you guys for chatting and sharing your feedback. And give me a second. I'm going to jump over to this older screen in order to. I'm trusting the count that was provided to me. Let's see. Oh, I have it here also. So let me do it on this screen so I can leave myself up. Okay. What's your favorite high yield savings? I can't say that I have a favorite. I use, I'm using Discover, but I think there are some that have a slightly higher APY. I don't think you could go wrong by going with Ally or SoFi or any of those names. To make sure that you're going with someone that is reputable and insured. That's what I always say. But can't say that I have a favorite. I've had a good experience with Discover. No no limitations on sorry. No limitations on, the amount that you have to put in to get started. So I have multiple accounts, for different reasons. I can name them, whether it's for Christmas or car repairs or what. Oh, Fast Eddie, I think I'm not sure if he's still here, but he was in the chat today. So gifted memberships went to Fast Eddie, DB, Sharono, Nancy B, Tap In Podcast, Tap In Productions. Okay. Fast Eddie said thank you. Okay. All right. Thank you guys for supporting my goal of the day of 50 likes. Hopefully I can get all the way to 100. I decided to set it at 50 for today. Like I said, because it is Super Bowl Sunday and it is Super Bowl number 60. I do not know how to take that down. Let's see. Banners. Here we go. I'm going to take that down and put up some different pop-ups. All right. So Vincent is sharing some. Let's see. We have Capital One lets you deposit cash at a CVS location into your checking account. Not sure if their high yield savings account does the same. I've never heard of that. Okay. But Capital One, it's a name that we've heard of. But like I said, whoever you're going to go with, you have to be comfortable. Make sure that their insurance goes to the limits of what you're depositing in. Usually, it's like $250,000 or something like that. So, go with who has the features that are in line with your needs. For example, one thing I didn't want with my accounts at Discover was having to have a direct deposit. And so that's one of the reasons why I decided to go with them, as well as, their APY was, I was okay with it. Like I said, I think there were, even at that time and still now, other companies that were slightly higher. But it's all so much better than the Chase and the Bank of America. So don't, overthink it. Find one and don't have your money sitting at that local bank. Okay. Taking a look back at the chat. Fast Eddie. Miss Boy, I hope I answered the question concerning why Discover. One of my family members was already using Discover, and so I decided to go with it also. But yeah, I definitely have seen like the ones that I've already mentioned. There are many others that you can go with, but I've had a good experience. Okay. All right, so guys, let me know if you have any questions, and thank you for has your Discover account been rolled into Capital One app website? No, it says it's still Discover website on my phone. I haven't had any change to that yet. Synchrony is another Capital One, also has high yield savings account. I have funds spread out over several accounts. Yes, that's how I've gone about doing things. But, like I said, just like with investing, there's no one size fit all. Some people might want to just have one emergency funds and that's it. But some others might want to have different accounts for different goals. And obviously, if something comes up, you can then take money from yourself from a regular savings account. I hope that, you create something in that way. Anything other than tapping into your retirement account and incurring those fees, penalties, as well as cheating your future self. So what is Key? Oh, hey, Key, thanks for tuning in. Trying to live like you, Belt Loop. What is Belt Loop doing? What did I miss? Oh, Anthony, you finished work and you got to catch me live for a minute? Oh, I've been going for 1 hour and 7 minutes. Yes. Well, did you have a 3 to 4 appointment interview? So very cool. I have yet to retire, but I am trying to set my retirement up. I'm shoveling a lot of money into my accounts, but I live very inexpensively. Okay. Belt Loop, you sounding like Daryl Fire with Dr. Ninja Turtle. He's always saying how frugal he is and striving to live below his means. So what is Cyril sharing here? I do not make 60K as an adjunct, but I can put 100% of my teaching income into retirement every year. That is my goal. Yes. But in addition to that, you have your real estate, you have your rental income coming in. So yes, multiple streams of income. I put more money into my retirement account than I spent last year. Okay. I use Fidelity brokerage cash management account. Yes, that is another option, and I use that too. I do use that too. Thinking about having my business account. I have a investment account for my business, but I'm thinking about moving my business money to Fidelity and using their cash management. But someone asked me about that one week about whether I think that that's better than having a bank account at, some of the ones that we've mentioned. And to me, I said, it's all the same as long as it's a reputable insured company, then all the APYs were pretty much the same. I think I shared a few recently, and they were all about 3.5, 3.6%, whether it's Fidelity or, even my Webull and MooMoo account or Discover. They were all very similar, very close. And speaking of that, if you use my MooMoo account, use my MooMoo referral link and set up an account, they're still giving 8.1 APY for the first 3 months. So you could take advantage of that. And then, if you're ready to create a new investment account, it'll be there ready to get invested. Or if you just want to take advantage of that APY for that introductory rate, and then it comes down after the 3 months, it comes down to a regular rate in line with what we're talking about, what all the companies are at about right now. But that is a great bonus of 8.1 for that time frame. My saying is spend less, invest the rest. Okay, thanks for sharing that. That sounds like a plan. Overtime isn't accessible everywhere. Okay, my base pay isn't 60K, but I make over that with overtime. Okay. Okay, so you guys have been having your own little conversations going on. Buddha, I will rewatch this from the beginning to the end. Thank you, Buddha. I was watching you this morning. Thanks for checking in. I guess my saying, if I had to give one, would be hope for the best, expect the worst. Oh no, that's not. No. Hope for the best, expect the worst. I don't know about that. Maybe it's not sinking in. I want the best. I don't want to expect the worst. I want to expect better from myself and everyone around me. Your channel is similar in size to mine. Let's see. Are you buying the dip in crypto? I did. XRP. No, I don't think I added any XRP. Oh, XRP was down to like 140 the other day. I have added some Bitcoin and FBTC to my portfolios recently. And guys, I do it all. I might not talk about certain things as much as others, but yes, I have crypto in my portfolio. I have Ethereum, Bitcoin, XRP, FBTC over at Fidelity. But yeah, and I don't have a stop loss on those. I don't trade. I'm not trading my crypto. Those are also investments when it comes to my portfolio, but I'm ready for the volatility. I'm ready to wait out a 4-year stretch of even a huge downturn when it comes to my crypto. I've been through it before. If you hear before, you've probably heard me say that I was holding. I had Bitcoin in my portfolio, saw it go from 60,000 to below 20,000, and then to 100, and now to where it's at today. So I'm okay with that. but I have to invest there what I'm willing to see all that volatility that that portfolio has to go through. So I have low expectations of people. Okay, I hope I'm not on that list of people because I don't want to be on that list. I don't want to be on the list of people that you expect worse from. It the stay motivated. Is it the stay motivated video? What are you guys talking about over here? All right. So I'm just taking a look to see if there's any questions or comments. So I'm going to take another station break. If you're not already, subscribe, like, hit the notification bell. If you enjoy this content, this live stream today, this is what we talk about here: investing, finance, budgeting, ETFs, index funds, stock market updates related to those individual blue chip companies, as well as every once in a while, some crypto. I have links for MooMoo in the description, as I was mentioning. If you want to support me, you can open an account there, get that 8.1 APY for the first 3 months. I am a crown trader in Keenan Grace's Discord. If you are interested in joining that and increasing your knowledge when it comes to options trading, having access to myself, Keenan, as well as 10 other crown traders over there. All right, so Vincent has a quote to share. Let's see. Be well, do good work, and keep in touch. A quote I do my best to live by. Okay. Be well, do good work, and keep in touch. Sounds good to me. Anthony, is this a joke? Guys, I'm not big on reading financial books. I have gained a lot of my knowledge just from being in certain communities and really going through it trial and error. And so I don't usually have many book references for you guys. All right. Invest in your brain and your life will change. So who started this? Has everyone inspired to share their quote of the day? Anthony, do you have a quote that you like to live by, or did you share one already and I forgot? So guys, make sure to drop me any comments. We're going to be probably wrapping up soon. Thank you for getting me to those 60 likes. Congrats to the gifted members. Make sure to I will put up a new community page post if you have any questions during this month while you are a member. Make sure to ask so that I can prioritize your questions and you can see if you want to continue being a member. I don't read financial books. I just come here and watch your videos. Okay. See, Anthony, I am on Buddha's book that she can refer to. Okay. So, guys, I hope you enjoyed today's topic. I was chatting about building a portfolio, making sure that you're finding the account that matches your needs. Hopefully, for me and many of us, the first account that I want us to have is our retirement account to take care of our older selves, ourselves, start that as early as possible. Like someone was saying about my daughter, you have time on your side the earlier you get started. So do that. If that's all you're interested in doing, focus on that for the long term and make sure you have yourself on track to being a multimillionaire in retirement from that alone. Make sure to open different accounts for different reasons is what my encouragement is, so that you're not cheating yourself by taking tens of thousands of dollars from your retirement now, which was supposed to stay invested and grow for the future. And then obviously another big part of it is getting your credit established, having credit available to you, because you're going to need that for many things that we need to purchase. But doing that along with having savings so that we can pay off our credit card immediately and not be hit with all of that interest. From there, when things happen, be ready to build up your emergency savings account again. And whatever it is, whether it's you're in the, debt repayment, building up your savings account or building up your investment account, don't think that any amount is too small. Just focus on, especially when it comes to your investment account, I want your investors to stay invested. That's a little bit different there. I don't want you to sell your investments early. I don't want you to, be hit with taxes and different things like that before you intended to. So make sure to think through what can you put into an account and actually leave it there and let it build and grow and be on track to do its job. So we also talked about, having an understanding of your company's offerings. Really take the time, call up, do some research, do some digging. Don't be like the person I was talking about earlier who was in a target date fund that gained less than 3% in a year when the S&P was up nearly 20%. So you have to make sure that these things are not going on in your portfolio. There's no reason for it. We're here to build wealth. We are here to make our money, make more money. We cannot be in underperforming funds. Make sure even if you are limited to a target date fund, I showed you a way of taking a look. The target date funds, they usually come in, 5-year increments. Get the detail of all of the funds that are available. And then, what is the percentage, what's the weighting as far as stocks, bonds, and things like that. And I gave you a way that if you are strictly limited to that, there's a way to even do better. So don't feel like there's anything that is going to hold you back. Do your best to make sure that your portfolio is thriving, that you are doing the best to maximize your money and not let any opportunities pass you by. So, guys, I think I see another one of our new channel members in the chat. Thank you for stopping by and congrats on your membership. I gave those out because I was requesting at least 60 likes while we are live today. And also, guys, I think my Instagram is still tagged. If you're not already, follow me on Instagram. I do post there quite frequently. I always try to put inspirational things in my story on a daily basis. And I post everywhere. And I try to keep myself active and out there and giving encouragement all the time. Yes, go follow Lisa on Instagram. Oh, thank you, Andrea, for tuning in. Hello, happy Super Bowl Sunday. All right, so if anyone is in here that is a Discord member, I will be going live tonight for our Discord live stream. This is one of my regular Sundays. I'm keeping to my regular time slot. Hopefully there will be people tuning in live. If not, you'll have to catch the replay. And I'm going to wrap it up for today. My stories are great. I don't know what I was telling a story about. Okay. Oh, we have another quote of the day. So let me go back to that. It's not where you start, it's how you finish. I like that one. Yes. Yes. Good night. Where are you, Belt Loop? Great live stream. Thank you guys for tuning in. Yes, make sure to follow me on Instagram. Thanks for getting the likes up on today's live stream and taking, I know it's so early, but taking a part of your day, Super Bowl Sunday, to tune in. And I will see you guys next week. Again, I want to thank Miss V for that super chat, Vincent for being a longtime channel member, as well as giving a super chat today. And congrats to the 5 gifted members. Make sure to feel free to drop me any questions, comments, and that's it. Make sure to check out my videos this week. Trying to be more consistent with it. Leave me any comments. Leave me a comment on any video or short that you watch. And feel free to give me any suggestions for future live streams as well as videos. I love to have your guys' feedback and ideas for what you guys want to see on a regular basis. And I will see you guys next week. We're going to end with Stock It Up. Stock it up.